Hello, friends. Good week. How are you today? How was your weekend? I hope you enjoy this one and you have good time with your friends and your families. And I wish you a great week for the week that just about to come. The last previous week was one of the most zigzagging week that the market actually knew on the last month. Crazy zigzag things as you can actually see on the 4 hour chart, up and down, cut it again and again and again and again. Problematic on every pair, and on every pair actually you can see it, right? Up and down, up and down, up and down. Very difficult to trade. That's why not once I actually explained. You see all the charts. Not once I have explained. Try to avoid trading during this period. It's not easy to trade this way. This market, it's not easy at all to find good move. There are no moves. There are no trends that we can enjoy, and very difficult to find yet reliable divergences that will actually begin a new trend. We are now on very zigzagging period, especially because of the June that just is about to come soon, and the market is probably waiting the for Bernanke's future. Let's call it this way. Market is waiting for Bernanke's future. So until the speculations are so high, many traders are out of the market, and for these days, uh, very logical place to be in, as I call it, on the fence, right? There is a there is a place for everyone, friends, on the fence. So I just uh, join you to join me. Um, Sorry, I just invite you, not join me. I just invite you. That's the right word. To join me on the fence for many currencies. And if we take trades, let's just make sure the risk is lower than usual because we don't want to be in this zigzagging situation. So, as I said, many pairs are not allowed to trade anything yet, but let's see the pairs that do have the opportunities, and probably we will see some interesting things. Let's begin with the euro dollar, the weekly chart. Well, the last week and especially Friday, which actually looks like begin the move, especially Friday, it looks like they begin the next wave of the down move. We have had an up move, we had a first wave of the down, we have now the second, and probably and most likely we're just about to have another down move. Right? It looks logical, but let's see from the weekly chart. Let's see the confusing situation. The weekly chart says that we still have a powerful support line just right here around the 20 moving average of the weekly Bollinger Band. It is very strong support line that still was not broken. Despite of all the problems and speculations about the debt on Europe countries, such as Greece, Spain, Ireland, and much more, like Portugal and more, right? Despite of all of that, the euro still holds this level, which is dynamic support. We could have in about 2-3 weeks, we could have a creation of hidden divergence here, right, between these lows, which will hold this level, and then bam, and the euro will go up again. Also possibility. So the weekly chart is not clear with tendency for the bullish possible hidden divergence, as long as 20 moving average holds. On the daily chart, although we see the forced down move, the correction with this flag 4 days in a row, and then bam, one big red candle during Friday, right? So, well, let's admit it, it does look bearish. The market does look bearish, and logically and technically, the euro should continue its correction. It still didn't break never the 140.40, the 140 figure even, this support line, which is also the 20 moving average of the weekly chart. And it looks like the euro wants to go there once again to test this level. So it does look bearish, but well, it's difficult to trade this pair. We can see that there is 4 hours SRS as well with broken uptrend line, right? With broken uptrend line and broken lows in a row, right? Broken lows in a row. That's the last important low that just was broken. So it does look bearish, and with a stop loss above the last high, it's possible to look for more down move. It is risky. It is risky, but it's possible to look for this down move, which could actually take us for the 140 at first, and maybe then even deeper. Sorry, maybe then even deeper for the 139. Who knows? That's the levels that should be reached on the euro. And from that, I will not go for the pound. I will go for the euro yen, which is also a pair that looks bearish. Look, friends, on the euro dollar, we have had the fourth leg. Here we have the third, the fifth of the full move, and the third down move. 1, 2, 3, 4, and now it looks like a beginning of the fifth. The stochastic is little problematic because it did not break either yet, right? And the MACD, despite of all this beautiful down candle, still didn't change the slope, which is suspicious little bit, right? Let's go for the weekly chart. The weekly chart here as well holds this support, holds the 20 moving average. But very important to mention just right now that the investors have entered short the euro yen as a protection of all their trades they have. They have long euro dollar, they have short dollar yen, and that's a protect. It's a kind of hedging situation to hold their risky positions. Enter these levels short with stop loss at 120, right? 120, that's the stop, and open target, which they predict could reach 107 again. So they are short on the euro yen, but it's not a regular trade. It's a protecting trade. So I don't say protecting trade will not work, but it's protecting trade yet, and we have to treat it this way. So what about the euro yen? It could go down. Yes, it could. It could reach the previous level again. It could complete a divergence here, but it looks like, as for now, it looks like we're going to have the down move. The 200 moving average though is zigzagging up and down again and again. Little risky, but still possible. The SRS, that's our low, still holds 115.20. Well, let's see how the week begins. The down move is very logical, very possible for this pair. Now I go back for the British pound against the US dollar, and just for a few words to say stay out of this pair. It's the most unclear pair as for now. Look at the candle and you will understand. Look how it looks like. Up, down, up, down, up, down, up, down, up and down, zigzag and again and again and again and again. We don't want to be in this kind of trades. False breaks, up, false breaks, down. Leave this pair. That's the most important. That's the most logical thing to do. But be ready for possible up break. If it does break finally the 163 and close above, that would lead us for a most beautiful probably trade, and, will take us for the next level. As for now, leave this pair. Nothing to do. That's why I even don't bother to talk about the possible targets. First, let's wait for the break. Then we will show updates. On the previous week, there were no updates. There was nothing to update, nothing to take, nothing to trade. All was risky. All was too risky. There were some good trades, but intraday trades other all others are very risky and better not to trade. Well, let's go for the next pair, and that would be Australian against the US dollar. We still hold this support line, 105.50. That's the one, maybe 105 figure even. I still wait for this one to cross down to take it short, and if it breaks, that would be our next target, friends. Our next target will be 102, possible beautifully down move, but also as for now, um, I can't avoid you say? I can't avoid this possible break of this downtrend up. And if it breaks up, that could be the next wave for the up move. The divergences are still there. Possibility for down move is still there, but there is one problem. As long as the gold continue to rise, it will make not easy life for the Australian dollar. And while the Australian is zigzagging and the euro is going down, pay attention, friends, for possible next long-term direction. Pay attention for possible next long-term direction for this double bottom and this divergence on the euro Australian that could take us for a long time up move. That's the weekly chart. Very early to take. Now I just show you, so you know we will follow it during the next weeks, possibly the next month. Okay, so I continue for the next pair. The next pair would be dollar against the Canadian, and watch this pair, friends. I still out of this pair. All the last moves here, all the last, you see, blocks on this downtrend line. Not easy to trade. Once this line will be broken, I would believe then that dollar Canadian will go all the way to the parity level. Well, 0.99 would be the forced, but parity level will call this pair as well. As long as this downtrend line holds, please stay out. Once it is broken, take this trade. Don't hesitate with stop loss below the last low and targets on the next resistance 0.99 and probably the parity level, which will also be reached. Just a quick reminder, according to the weekly bullish butterfly that we have been talking about in the last more than a month, the 101 is a target. Just a quick reminder. The next pair is Euro British Pound. We were talking about this pair as well. Well, it does look bearish, um, and that's all I can say just right now. But here as well is problematic situation. That's why I also stay out, despite of the bearish signs, because it's very possible, very logical that if for 1 or 2 more weeks this pair holds this level, we will have our next uh, bullish hidden divergence being created. So once again, the 20 moving average, you see how critical it is, and the 087 level, the this tar, this sorry 086 50 086 70, that's the range, is very powerful support. I do believe it's going down for 086 40, maybe even a little lower, but but as long as 20 moving average of the weekly chart holds, it's very difficult to jump into this trend. Very difficult. Well, let's go for the next interesting pairs, possible pairs for the next trade. British pound against the Canadian dollar. Mark this resistance, friends. Mark this resistance. Oh, what's going on? Oh, here it is. And mark this downtrend line. The break above, and it looks like we're going to have a break above. A break above this resistance and uptrend line will take us possibly all the way to 161, maybe a little lower for the next resistance, 160, 60 maybe. 160.70. And if this level will be broken, we are going to have 164 as next target. It does look logical on every chart we watch. So British pound against Canadian is one to follow. Look for a break and close above the downtrend line on the daily chart, as mentioned just right here, and this resistance above 159. If it's broken, we are going up 160.70. That's the average. Would be the first target. 164 would be the next. Well, and now let's go for the gold, silver, and indices. The gold has broken this downtrend line. It does look bullish. It still holds its uptrend line. Never break it yet before. There is a resistance 115, 1513, sorry. That still has to be broken before going up. That's the one. But on the 4-hour chart we see that the previous resistance was already broken. Then now it will probably be tested, and then the gold should continue up. Nothing bearish for the gold yet. It could change, but as long as that's the situation, nothing bearish yet. But once this uptrend line will be broken on the daily chart, our down move will begin. Until then, don't look for the down move. The silver still holds this down support line, sorry, that we were talking about in the previous week. Still holds, still zigzagging. Avoid it. I'm going now for the indices, and finally I could say it's time to get ready. It is time to get ready. Once again, it's time to get ready. That's the uptrend line. That's the support line, right? The support line that was not broken yet. Watch the break, and then the weekly divergence, the weekly down move will possibly begin. Be ready. It looks like it is about to happen. That's the S&P 500. Watch the Dow now, the same situation. That's the support was holded on the previous visit. Look for the breakdown. MACD is ready. RSI is look like getting ready, and it's possible will break finally the 50 level. Look, it's very possible. So let's be patient and wait until it happens. Once it happens, that's the call to sell. That's the call to sell. So, a summary, what do we have for this week, friends? Possible more down move euro dollar, a down trade from the investors on the euro yen from the last report I got. The last report, we have the Australian dollar as possible break of 105.50 for the down move, or the daily downtrend line for an up move. We have the dollar Canadian downtrend line to wait, the pound Canadian as well. We have euro British pound to continue for the 0.8650, possibly 40 as well. That's the weekly 20 moving average. Possible more zigzags, friends, possible more zigzag week, but uh, don't get upset, don't get nervous because of it. It's about to change. We see the chart. As long as it continues, the bigger and the reliable the next thing will be. Until then, avoid big risks, save your money, take lower risk than usually, keep your profits that were earned actually on the previous moves. I wish you a beautiful week, and I wish us all reliable moves, reliable entries, reliable trends to join. I will update this week once there is something to update. As you see, when the market is zigzagging, nothing to do. I am on the fence, and I wish you amazing week, you and your family's friends and your friends. Thank you very much for watching this video and have an amazing week. Goodbye.